Every month I look for 3 phenomenal companies to put on my watch list. And these are the 3 that I found and I'm going to be watching in June. Just like the previous stock pick video, I ordered these stocks in my own perceived risk from low to high. And I'm focusing on a single industry, which is the internet. And in the next decade, we're going to see internet service companies have a much higher demand. And because of this, they're going to have a higher value. So each of these stocks I consider to have long-term growth potential in the industry, and they're currently a good opportunity to purchase within this month. My first pick is Palo Alto Networks, and I consider this the lowest risk out of my 3 picks. And I want to get their financials out of the way because I just want to talk about my own perspective on them and what I personally think. From a financial standpoint, I would consider it a strong investment if they continue to grow. They have a majority of their assets in cash and short-term, long-term investments. So this is a 4-to-1 ratio of cash to debt. As in, they could pay back their debt 4 times before running out of cash and investments. Now, one of their problems is the negative net income. They have great gross profit margins and they have great revenue growth, but their cost of selling and general administrative is 90% of their gross profit. So this is a problem, but they are growing revenue a lot. I mean, it's 48% since last year, 2015, and it's almost 300% revenue growth since 2014. So I like them because they're a company that was trading around $150, and now they're hovering around $115. So I would consider this a cheap company, especially considering the reason they're down is because of earnings. And earnings and forecasted earnings can drive stock prices down, even though it's not the worst thing that can happen to a company. A lawsuit is something that you don't want to get into if it drops the stock's price. But in this case, the lower forecasted earnings for quarter 3 is what dropped this stock. They do have negative earnings, and this is a problem, but they wouldn't have negative earnings if they did not invest in research and development as heavily as they are. Because they invest in research and development, and because of this, it does not seem like they're worried about taking the debt to grow the company more. So the last point I want to drive home about them is that because they're a cybersecurity company, they're going to see increasing demand as the information age progresses. So the most recent cyber attack caused a jump in cybersecurity companies, and this is because networks are going to be required to have cybersecurity investments just because those networks hold valuable information and data. The demand in the future and the current demand around this idea is why I see Palo Alto Networks a great investment at this price. All right, next we have Akamai Technologies. They're a strong company with some really great features. Like I said, I just want to get their financials out of the way to talk about their company. So they can pay their debt 2.5 times over with their current cash and their long-term and short-term investments. Also, their revenue growth is steady and their research and development has grown with it while still having a positive net income. And I like seeing this because as the world of the internet grows, demand for up-to-date technology grows. And they are the leader of their market and they're still growing. So Akamai provides cloud services for businesses, applications, and they also provide delivering, optimizing, and securing content. So the large companies, FANG, were customers to Akamai at one point. Now, currently, these large companies moved to provide their own services in-house, but what Akamai did is that they became less dependent on these huge customers, and they're successful today because of that. And this is why I like Akamai, because they can adapt to the changing environment of the internet world, and they can evolve with it. Their CEO is keeping up with this adaptation, and they're going to see success in the future for exactly this reason. So they're down from being a $60 stock after reporting beat earnings, but lower guidance for quarter 2. So another negative earnings situation, which leaves a company beat up, and this is the opportunity that I like. And I like these companies that are beat up after earnings because they only have usually an initial drop after those earnings, and it's usually around 20%. So if I can sell put options at a 20% cushion, well, the stock would have to drop another 20% for me to actually lose money. And so this is what I did today, actually. I opened a position selling January 2018 puts at a strike price of $40 for Akamai. And in return for one contract, they paid me $200. The last company I picked is rather high risk, and they're the recently IPO of Cloudera. So Cloudera is a data analytics company that utilizes machine learning, and this is going to be big money in the future if they're successful. So machine learning is what I'm learning about right now, actually. And if you want to have a very valuable set of skills in the future, it is skills in artificial intelligence and machine learning. And this is because machine learning can take very small amounts of input in the form of hard-coded commands and have vast amounts of output by utilizing data to make predictions. So I'm not going to go into what machine learning is in the topic, but I do plan on making videos on it once I know more about it. So if you're interested yourself, I really recommend reading the book How to Create a Mind by Ray Kurzweil. I just finished it, and it was a great introduction to some of these ideas behind machine learning and the mind. There's an affiliate link in the description for you to buy the book if you want to learn more about this stuff. So Cloudera uses machine learning for analyzing data, and this can help take data from customers and show the business which customers are valuable or how to get more customers utilizing the data that they already have. As a company that just came public and is using machine learning, it has a very strong potential to do well in the future of this machine learning age. Another thing to look at is their team, and their team is very strong, especially their leadership. They're coming from Silicon Valley and the largest tech companies, including Google, Oracle, and Facebook. Now, they don't have any financials to look at, and the first quarter is going to be reported on June 8th. So make sure you put it on your watch list, and I'm going to be waiting for this report to make a decision whether it'll be a nice investment. But like I said in my previous videos, always understand the business. So if you want to invest in Cloudera, which is really cheap right now, around $20, make sure you know about machine learning, make sure you know about artificial intelligence, make sure you know about supervised learning, unsupervised learning, and what companies like this actually do. So when I think about the future, the internet is going to dominate the world even more, and in a situation where technology evolves, more threats come, and also more tools are also going to be going into the future. And these companies that I chose either deter cybersecurity threats or they create valuable tools. We're seeing the beginning of an age guided by machine learning and artificial intelligence. Amazon is a good example. And these companies that I chose have already started in this business, and they're doing successful right now. So I think as this age grows, we're going to see these companies grow with it. So that was the video. If you liked it, hit the like button. Also subscribe to get my videos notified to you. This Sunday I'm analyzing a company, so make sure you comment below with the company I should analyze.